How would you rate the sync of this? I'm leaning towards mean reversion long, and if I were to draw multiple supports through the 12-hour regime, long trades entered during the yellow highlighted areas would likely be a loss, so maybe a neutral or slightly better than 50% sync for mean reversion longs. But if I were to evaluate sync based on the support level I drew only, it seems like it's high sync. Okay, let's take a look. Let's take a look. So when measuring sync, the first thing that I want to do is, where do I think this regime has started? Where do I think the starting point of this regime is? So it looks like the open interest was rising over here, and looks like this coin was going pretty ballistic during this window of time, but then it really started to taper off and get boring. And you can see this in the open interest here as well. So open interest is rising, and then it starts flatlining and it gets pretty boring. The same with the volume. The volume is like, maybe I'll use a different color. There we go. Different size brush, and I'll zoom in. Volume looks like it's, well, it's noticeably like high, or it's higher in this region than it is in this region. So like something must have happened somewhere in this area where the regime started to change. So I might assume that the regime started to change somewhere in this region, maybe. So I might actually not put the start of the regime to here. I might actually start thinking about the start of the regime somewhere from this point. But doesn't matter. We'll still go through the exercise. Like having this much margin of error, it's really not that big of a deal. So okay, let's test the sync. When we're testing the sync, let's go with first looking at the support levels, and then we'll look at the resistance levels, right? Because we want to look at both. Okay. So the first question is, okay, well, if I was to blindly get long from every single support level, what would my performance look like? This is just if price touches any level and I just say, yep, market long, I don't care, I'm just getting market long, TP 1R, stop loss 1R, just blindly, gung-ho, firing mean reversion longs from the hip. How would my performance look like? Well, you drew a level here, so this looks like that would be a win. If I jumped in somewhere over here again, it looks like it would be a win. These ones would be, I'll just write it. So we have win, win, loss. These ones look like wins, so I'll just put in win. I would say loss. I would say win. Let's say win again on this one. That looks like a win. If I was to get in again, it'd probably be a win. This one would be a win. And then here it starts to get, here is where it starts to get messy, like at this point. So this would be like lose. That would be lose. Okay, let's count the wins and losses. So we've got the wins and losses. And I've got mean reversion long, and I'm going to be tracking the mean reversion shorts as well. So we've got 1, 2, 3, 4, 5, 6, 7, 8. Cool. And losses, we have 1, 2, 3, 4. Cool. So yeah, in general, actually looks in sync with mean reversion longs. Now let's look at MR shorts. Questionable. No, okay, no, this one would be, okay, this one would be a loss. This one, ooh, okay, this one would, I would say this one would be a win. Maybe, you know what, to make this easier, I might just delete the L's and the W's. I don't normally do this when I'm checking sync, by the way. I'm just trying to visualize it to make it easier to see. Okay, what do we have next? So we've got that would be the loss. This one would be a win. That looks like a win. These ones here, they look like wins. Oh, that's maybe a loss and then a win. So I'll just put like loss and win just at the same time. That looks like a win. This one, oh, can't actually tell if it actually hit the level. I'll just assume that it did. This one returned to the level, so I'd say win. Okay, that would definitely be a loss. And then, is there another one in there? Maybe there's a win in there as well that I'm not seeing. Oh no, this one. Okay, these ones would be a loss, so I'll put a L in there. Okay, am I missing anything? Okay, am I short? Let's take a look. So we've got how many wins? We've got 1, 2, 3, 4, 5, 6, 7, 8. How many losses do we have? We've got 1, 2, 3. Oh, it's actually very similar. Okay, yeah, so if I was just trading momentum in general, it would probably be really challenging. Really, really challenging to trade momentum in this kind of regime. And it makes sense because one, well, let's look at the volume. Volume is decreasing. And two, what kind of price action do we have? We have very choppy price action. If we were to zoom in and look at how is price interacting with your purple moving average, it's actually chopping and slicing through it quite often. So this also is just another sign that it's not really that great for momentum. So yeah, I think that for sure, this type of price action is going to be a little bit easier to trade for both mean reversion longs and mean reversion shorts. However, that doesn't mean that we too can just blindly start jumping in at every single support level or resistance level with the trade. We're going to need to have something which kind of gives us a little bit of edge to work with. So I see here you've got your risk reward tool already planned out on this level. Awesome. I think that since we don't have like a super obvious kind of choppy range that's happening right now, like this isn't like, oh, the same levels are being bounced from over and over again. Like it's bouncing from the same levels, it's bleeding through it a little bit, it like kind of pops its head above it, now it's grinding back down. Like it's not perfect, and most of the times we will be dealing with some kind of imperfect price action. So to compensate for the imperfections, we're going to need something to work in our favor, and that something is going to be one of these bad boys. We're going to need some kind of volume spike accompanying a price spike, and then we can maybe go for something. So if there is some kind of level here that you have drawn, and then price does one of these, and then it breaks the structure, then we can jump in and say, okay, cool. But just the fact that it hits the support level doesn't mean that we should jump in. We need some kind of confluences working alongside the trade. But yes, I think that generally speaking, I think that this is more I wouldn't say in favor for longs. It looks fairly even for both longs and shorts. So I would just say it's easier to trade momentum rather than mean reversion in this kind of regime. Okay, sweet. I think we can wrap up this question.